Hey folks, Dan Frio here, TGIF. Today is February, what does that say? 26th, 2021. You're going to like it. We're finally, I think, hit a bottom on everything. And I see up, and away. So don't go away. Welcome to the morning update with Dan Frio, or the opening bell with Dan Frio. That's the name that everybody chose. So thank you guys for reaching out and doing the poll that I did the other day to name that channel. So the opening bell with Dan Frio. So where are we right now? So let me explain kind of what happened in the last couple of days, why everything or the world's kind of crashing. We never really pay attention to the bond yields because basically bond yields were irrelevant. They were completely irrelevant a year ago. We follow the 10-year Treasury for a multitude of reasons, but here's some of the big reasons why we follow that. When those yields are basically zero, it's forcing people to go out and invest and do other things, buy cryptocurrencies, buy stocks. It basically forces you to do that because the interest that you're getting on treasuries and savings account are zero, okay? So what's happening right now is treasuries are skyrocketing. They're peaking at about 1.5 to 1.6. Okay, remember that number. There's a number that Wall Street watches, and it's the S&P 500 dividend yield. Okay, so we've never really talked about this before, but there's an S&P 500 dividend yield that is what we all as investors watch to say, okay, if the S&P 500 dividend yield is higher than other treasuries or other secured investments, then we're going to go with the S&P 500. Or we're going to buy stocks. Okay, we're willing to take extra risk to get these returns. Okay, so what's happened though is the 10-year Treasury is one of the benchmarks to this comparison. Is it went from basically 0 or 0.4 at one end to 1.4, and that's where I said, if you guys go back and watch my channel, I kept saying 1.4 is our trigger point. I'm going to tell you why now. Okay, that is the benchmark, and once it exceeds that, now it's going to compete against stocks for investments. So you have a finite amount of money out there, and you have one product that you're buying. You're going to drive up those prices, and that's what you've seen in the stock market. Well, now what's happening is the yield, because that yield has equaled out the S&P 500 dividend yield index that we follow, and the 10-year Treasury. Now they're basically zero, or even the 10-year Treasury even exceeded that. We hit that yesterday. So now instead of just having the stock market to invest to get yields, now you have the bond markets competing to get yield. So the treasuries, the treasuries. Now you have a higher yield return on treasuries than you do in the S&P 500 index. People are going to start moving money out of the stocks and into bonds. So if you've already been in a bond or a 10-year Treasury, you sell it and you buy back when the yield goes up. Hopefully that helps you. So basically that's what's going on. So we're having a bloodbath going on with bonds or 10-year Treasuries, driving down the price. Everybody's selling, which is creating everybody to sell. They're jumping back in and buying at the higher yields. Now those higher yields are higher than the S&P 500 yield index. So people are going to start moving more and more money over to treasuries. So you're starting to see the stock market crash. That's what's going on. So I'm giving you guys a secret that your friends now don't know. So now you can sound smart to your buddies. So I do this channel to educate you guys on what's going on in the financial markets. We cover stocks, crypto, real estate, and bonds. I do this to teach you guys. It's to teach and educate you guys. It's not to say buy this or do that. I'm not a stock advisor, not a wealth planner, not a financial advisor. I do this basically just to educate you guys on what I'm doing and use me as the guinea pig or the learning tool to watch what's going on in the markets. So let's dig in. What's going on with the stock market? Let's start with stocks. If you would, please go to my channel. Subscribe. You can watch all my videos. I just peaked over 700 videos, so I hope you like my channel. But let's go over to the stock market. Jim Cramer, I watch him on a daily basis and a nightly basis to figure out what his thoughts are. I've been watching him for about 20 years, and I just wanted to start out here because that's a piece of the puzzle that I'm watching. But let's see what's going on with stocks. So if you look up here, we got the S&P 500 up 21. You got the Dow down 162, still tanking there, but you got the NASDAQ coming back up 1.45%. Okay, that's a big play right there. Because the NASDAQ is getting clobbered. All right, here's where stock slide as bond yields sharp shake. Oh, shake markets. Sorry about that. I thought it said snake. I'm like, that doesn't make any sense. Guys, that's what they really don't tell you what's going on. That's behind the scenes. This is what's going on. So many people will say, well, okay, bond yields are going up, but they're 1.4, 1.5%. Who cares? That's why. Now you have the insight of what's going on there. So this is what's going on in the markets. We've seen the bond yields start to stabilize. So let's go to that. We'll go over to here. This is what people watch when they follow me on a nightly basis on my rate update each night. 10-year Treasury, 1.48. We were at 1.6 yesterday. So it's easing back down. It's down 12 basis points. We love it. The MBS market loves it. We're up 31. Okay, so that's what's going on there, but we're going to get to that in a second. So this is what's going on with that. We're hoping that the bloodbath in the bond market starts to deteriorate and balances out the market. And I think we should be there because we had a complete crash. I still say it's an overreaction. So that's mine, and that's how I'm investing. You go to CNBC. They're basically coming out saying the House has approved the Biden $1.9 trillion stimulus package. It will be going to the Senate, and it should be getting approved there. One of the biggest stickler points of that was the $15 minimum wage. You might be a proponent of it or not. I'm not going to go down that realm, but I don't think with everything going on right now, we should be forcing companies to increase their wages if they're not at least paying 15%. You might have your own argument with that. I'm not saying never, ever, ever. I'm just saying with everything going on in our economy right now, I would vote against that. And you can rip me if you want down below. I'm not going to respond because this isn't a political channel. I'm just giving you my opinions and what I am doing personally. Okay, so that's where we're at there. 10-year, you can see here, benchmark 10-year notes traded at 1.6. Okay, highest it's been in a year before easing to 1.53, just ahead of the S&P 500 dividend yield of 1.48. There it is right there, guys, right there. The S&P index is 1.48. So once we hit 1.4 or above, you're going to see people moving out of stocks into bonds. You're also seeing bonds drop because people are selling the bonds that they have or the treasuries and starting to buy back at the higher yields. So that's what's going on in the stock market. So there a lot of the fundamentals, like Nvidia came out with earnings last night but got punished. Salesforce came out with earnings that are great, got punished. Why? Because the whole market in general is just crashing. But now we're starting to, I think we've found a bottom on a lot of these indexes as well as bonds. Okay, so that's what we got there. So now let's go to the stocks that we watch on a daily basis. Let's see where these are going. So we go through all here. We have basically half and half of what's going on in or gains and losses. So let's scroll down through here and see where we're at. Google's it's up 1%. Amazon up 1%. Apple up 2%. Let's go to the other benchmark is Facebook up 4%. Okay, so usually when you see that rotation into those technical stocks and a lot of growth stocks, you're going to see people moving money out of cryptocurrencies. That's why keep a balanced portfolio. That's what I do. So now today in the cryptocurrency world, let's go through that. The Bitcoin Cash is down 2%, Bitcoin down 1.4%, Ethereum down 0.38%. We dig down further to those blockchains that we follow. Again, we want to get in, if we like an area, here's my analogy on this. You like Apple phones. Well, you might want to say, okay, Apple in general is overpriced. However, who makes the Apple phone screen? Who makes the Apple phone speakers? Who makes the Apple phone semiconductors? How about we look at those and to play off of the Apple phone success. So in the Bitcoin currency world, I look at blockchains and miners. So the blockchains are down 1%. Marathon is up 4%. It got crushed recently. And you can see Riot, that's one of my biggest holdings, is up 2.3%. I've been recommending, or I'll take that back, I haven't been recommending. I've been adding to my position in Disney, which is right here. It's down 0.39, okay? But I'm still a huge proponent of Disney. This is my coming out of the pandemic purchase, as well as the XLF, which is the financial stocks. Because with higher yields on bonds and everything else, banks are going to profit off of that. So we might see a little deterioration in these right now because of the switching of portfolios with a lot of financial advisors. But this is where I'm focusing right now. Disney and XLF are what I've added to my positions recently. So let's go to the cryptocurrencies. They're probably down, which they are. Bitcoin down 6% today. Ethereum down 6% today. I also hold positions in Litecoin down 10% today, and Bitcoin Cash down 7% today. Guys, this is why these are so volatile that I say you need to have a position in these, but not a big position, because they'll go up and down 20, 30% in days. And if you're not looking as this as disposable cash investments, it's going to freak you out. It will. Trust me, it will. When I first started investing in them, I was like, whoa. Now I see swings of 10, 15%, and I don't even look at it. It's my long-term hodl. In the cryptocurrency world, instead of saying holding, so I'm holding these positions, we reference it as hodl. Means the same thing. So what's the dollar doing? The dollar should be crashing, guys, because the $1.9 billion or trillion dollar stimulus. But let's see. Nope, it's up. Why? No clue. And that's, you just have people trading and putting in positions, not with the fundamentals, but they might be chartists that just saw a bottom or something that they're like, okay, I want to dig into it. We're over my black line here that I focus on a daily basis. This should be down here. Trust me, in the next couple days, it will move back down to that area. What's going on in the real estate world and mortgage-backed securities? Well, we've gotten crushed, just crushed in the last 2 weeks. Look at this move. Okay, so those that are new to this channel, you might say, oh, this is great. Mortgage rates are dropping. No. This is what's going on to the price of a mortgage-backed security. It is a bond that trades that is the biggest component of your mortgage rate. Okay, when the price goes up like this, your yield or your mortgage rate goes down. We love up 40, but we're down. Let's see, right here, we were at about 103.25 if you look over here, and we went down to 99.5. Guys, that is a 400 basis point move. I've only seen this twice in my lifetime of doing this. One of it was last year when the pandemic hit. That's where we were. Rates skyrocketed, and then within a week they came right back. And they stayed steady there until the Fed got involved, the Federal Reserve got involved and stabilized the markets right through here. So that's that part of the thing. Good news on the real estate front is Fannie Mae and Freddie Mac. So if you have an FHA loan, a conventional loan, a VA loan, and you're in the forbearance package, you're going to have now, most of them expired March 31st. Those are getting extended out to June 30th. So do some research on this if your loan is eligible for this. But what I've been doing lately, and then the phones are ringing off the hook, guys, and I greatly appreciate it. I'm a mortgage lender. I've done it for 33 years. I started this channel just to educate you guys on my knowledge, but I also wanted to give you guys exposure on some things that your banks don't tell you and the insiders don't tell you, and I reveal those to you. Right now, there's a lot of people in forbearance. All I'm going to ask you to do is if you're in forbearance and your rate's over 4%, please call us. I'm not going to go through all the technicals with you. All I need you to do is call. We're going to consult you on it, go over specifically what you have, what your situation is, and then we'll go through the numbers with you. No sales approach on this. We're just going to give you the facts, the numbers behind everything, and say, here's what we would do. There's many people, I probably got 15, I want to say almost 15 calls yesterday, people asking me about forbearances. Most of them were helping. There's a few that I'm like, you know what you have is perfect for your situation. It might have been your rate is so low that it's not worth doing anything. The majority of people calling me yesterday ranged from 4.5 to 4.875 in rates. So if we can refinance you at 3, consolidate everything in, put you on a 30-year term, drop your payment, plus catch you up, and so you don't have deficiency balance or everything, makes sense. Okay, and for my YouTubers, I usually give you some kind of discounted rates or fees or something like that. We will work with you on that as well. So that's it for today, guys. I'll be posting later today at 4 o'clock the rate update to tell you guys what's going on in the real estate world. So if you like the channel, please don't forget to give me a thumbs up, subscribe down below, click the bell so every time I post a video, you watch it. I try not to keep my titles as clickbait. I try to make the titles something that informs you so you know what you're clicking. God bless, guys. I'll see you later today. Bye-bye.